In today's currency report, all eyes are on the Federal Reserve. Currency traders looking for clues about the direction of interest rates and messages about inflation. Another central bank also making headlines today, the Swiss National Bank. Speculation the bank sold its currency to weaken it. It's sending the Swiss franc falling against all major currencies. For more, let's turn to Thanos Papasavvas, head of currency management for Investec. He joins us from our London bureau. And thanks for joining us, sir. And I was wondering, how big of a deal is this move by the Swiss National Bank? Could others follow in its footsteps?
Well, we have seen the Swiss National Bank intervene in the markets both verbally and physically over the last few months. They are quite resistant of a strong Swiss franc, strong currency, which would delay the economic growth. We do expect them to continue intervening whenever the Swiss franc appreciates towards the 1.5 against the euro.
Is this a warning sign?
It is not. I wouldn't say it's a warning sign. It's more about, again, the level that the Swiss franc is moving towards. We don't believe it will have any impact on the other major currencies. This is very much a domestic situation, similar to the Norges Bank, when the Norwegian central bank intervened 2 summers ago in order to prevent its currency from strengthening further. So these are one-off ad hoc situations.
Well, Moody's said today there's no credible alternative to the dollar as a world reserve currency. Has this issue finally passed, or could it continue to weigh on the greenback?
We believe that this is a medium term. If we look at the slightly more medium term, over the next 3 to 5 years, a lot of the reserves held across central banks are predominantly in dollars. And we would expect on any strengthening of the dollar to be used as an opportunity for reserve managers diversifying some of their dollar reserves into other currencies, major currencies and possibly developing currencies such as the Brazil, Russia, India and China, which we've been hearing about more recently. So we expect there will be a gradual diversification out of the dollar over the next 3 to 5 years. Nothing urgent.
Well, are those the main reasons why you're bearish on the dollar?
That's correct. One of the reasons for being bearish is the overall diversification out of the dollar. The second reason is that in a gradual pickup in the economic recovery, we think that the pro-cyclical, pro-commodity currencies will appreciate faster than the US dollar, such as the Australian dollar, New Zealand, Canada, sterling as well. And the third is that the underlying fundamentals in terms of the deficits and the quantitative easing will in themselves be negative for the US currency.
Right. Well,
so these are the 3 main reasons for that.
Yeah, Mr. Papasavvas, we have about 30 seconds left. What about emerging markets? What currencies are most attractive to you?
Well, if we look at the EM exposure, we like to be diversified across the blocks. We prefer the Asian bloc and the Latin American bloc to our Eastern European exposures. And we prefer the Philippines, Indonesia in Asia, but also we like the Colombian peso and the Mexican peso in Latin America.
Thanos Papasavvas, head of currency management at Investec, joining us from London. Thanks. And you can find all the latest currency numbers and stories on our website, Bloomberg.com.